One, how are you? Bismillah. I hope everything is okay. Can we start by checking that the voice is going okay and everything is okay? Please type number one in the chat. If you can see me, can you hear me clearly? Please type the number one. Okay, great. Let me start sharing my screen. So I'll start briefly by introducing myself. Do I have someone here who is new? Someone who never attended any of my webinars before? Please type new if you are just, this is your first time with me. Okay, someone new. Okay, I will briefly now introduce myself to those who are just new with me. My name is Islam Ahmad. I'm a senior financial market analyst at GODO. Of course, this is just briefly to tell you about my qualification. I have the international certification in wealth management. I also have the UAE financial rules and regulation certification, also fundamentals of financial services. This is all certified by CISI in England and by ESCA CMA in the UAE. So this is not to show off, just to let you know that the person who is speaking with you today have the qualification, also the experience, more than 17 years of experience in trading with real money. So today I will be speaking with you about risk management. I will start this as I start every webinar and seminar by the risk warning. You need to know that trading in Forex and CFDs and other derivatives is highly speculative and carries a high level of risk. It's possible to lose all your capital. You can read it. It's both written in Arabic and English. So before I go on, I want to ask you, can you tell me your experience in trading? I want to know what kind of experience do I have in my attendees today? Are you a new trader? If you are a fresh trader, just type fresh. If you have experience, tell me like the time period for experience, like 1 month, 1 year. So if you have no experience, just type fresh. Someone 2 months, 6 months, okay. Some investment experience only, okay, 6 months in stock, okay, that's good. I have also someone fresh. Okay, so today's topic is very important, both for those who are fresh and those who have some experience in the market, because we often maybe forget when we spend more time in the market, we forget about this. And actually, this is the real secret of success. If there is one thing you need to grasp, you need to master before you become successful in these markets, it would be the risk management. That's why today I'll be speaking about this important topic. So when we say the risk management, you need to know by heart, you need to be 100% sure that you have this in your mind. No one can control the market. You or me or even the president of the United States, no one can control the market. The sellers and the buyers, this huge crowd, no one can control it. So from that, you would predict that you can never guess for 100% the next move of the market. But luckily, there is something you can control. It's in your hand, and we can say it's 100% in your hand, which is risk. Can I ask my attendees today if you have a real account, trading account with GODO or no? Please type yes or no. Real account or demo account? Just let me know in the chat. Someone has a real account. Okay, this would be very, very helpful for you in your trading. Okay, I encourage those who have no accounts, at least if you can open a demo account to be like, I will give some examples from the live market. After the first segment, I will speak sometime about risk management. Then I will go to the market itself and I will analyze some movements. So if you can just go to the GoDo website and open a demo account right now while I'm speaking in this first slide. Today's topic is very important, both for those who are new and with experience, both for using demo account or real account, because you need to experience this. Even if you are new with trading demo account, you need to apply these principles. So this will be very important to you. If you Why this is very important? Because what happens if you do not use risk management principles? What will happen? You will lose everything. You will lose every dollar in your trading account. Even in your project, in your business, if you are not applying risk management rules, you will lose everything. You could end up losing your entire account because you didn't adhere to risk management principles. So, if I'm saying these is very important principles, and everyone who has some experience in the market knows that these principles are so important. So why most traders, and these by numbers, by history, most traders, they do not apply these two principles. You know why? Two words: fear and greed. Fear, you see this guy on the left, this is fear, and the greedy guy on the right side, those are the two emotions that stand as an obstacle between you and applying the risk management rules. So out of fear, some traders, they don't place stop loss. They overtrade. They put huge amount or huge leverage, use a lot of leverage because of the greed also. So fear make you start trading without even stop loss. Greed make you use high leverage, or even sometimes you stay on a trade after you see some profit, but you don't preserve these profits. Do I have anyone in the attendees who have like blown an account, like lost your entire account in a single trade or a single day or a single week? Don't be shy, please. Share with me. Say, I am, if you did this. If you are the person I'm speaking about, don't be shy. Yes. So, blowing the account will be the end result of not using the principles. So what you need to know right now, this is for all of us. First thing you need to know to manage your risk is that you have to determine an amount of money. How much are you willing to risk, and how much do you expect to win? So, for example, if you put like $1,000 or $100,000, I don't care about that. I care about the percentage. Tell me, please. I'm asking you now. Tell me, if you are putting some amount, whatever that amount is, how much you expect to earn, to win during, for example, 1 month of trading? How much percentage? Right percentage. Like, for example, if you have an account of $500, $1,000, whatever the amount. Someone says 20%. Someone says 50%. Okay, in a single month, you are expecting 20, or someone expects 50. Okay, 30% at least, 40%. Okay, great. Let me now ask you another question. How much are you willing to lose in this account? What's the percentage? If it's in your hand, if it's your call, 0, 5%. Okay. Let me clarify something for you, especially for the zero answer. Someone answered, I want zero risk. Let me tell you the ugly truth of any market, of any trading, of any investment. We don't have zero risk. Even there is very low risk, but even this low risk, which is, for example, like buying US government bond, or like putting your money in the bank with some interest. Even when you do this, you still have some risk, because this government, this bank can default, can go bankrupt, can run out of money. Of course, we know, like by history, by logic, that some government will not be in this situation, like the US government, but still the zero risk is not there. Okay? So you have to get this idea in your mind. Zero risk is not in our hands, in our reach. We don't have zero risk. We have very, very low risk, which is the government bonds, especially like the US government bonds, like Japan. This very successful, very strong economy, when it gave us the opportunity to lend them, because actually when you buy the government bonds, you are lending this government. So for you, this will be a low risk, a very low risk, but still you have risk. So trying to find zero risk is not here, is not in our reach. So I want to give you another principle that you have to keep in your mind. And this is not invented by me. This is the real economy speaking to you. Whenever you are taking risk, when you increase this risk, you increase the chance of getting more profit. When you lower your risk, you also decrease the chance of your profit. You decrease the percentage expected for profit. And I will now explain more. But you need to keep this in mind. Risk and reward, risk and profit, expectation. This is only expectation because when we start, we don't know. But you need to have this in your mind, this idea that the expectation should be similar. If you are expecting 50%, you should be willing to risk more. If you want to risk less, then you need to accept less profit. Now I will explain this more. So let's now get practical and say actual steps you can do. First of all, you need to have what we call surplus. You need to have extra money before you think about investing. If your income is $100,000 per month and you are spending $101,000 per month, you are not having any extra. Actually, you are getting minus. There is no surplus. So the income is not the only number in this equation. Also, your spending is very important. So the moment you have extra, you have surplus, as we call it in economy, at that moment, you can start thinking about investing, about trading, about stocks, about anything. So you need to control your spending. And this maybe I will speak more in other webinar, in other lecture, but today we will only speak about risk management. So you start by that. You have extra money. Let's say you have this extra money. You have your savings, you have some inheritance or whatever. There is some extra money. So you need to, this is in my opinion, you need to divide this extra amount of money into three. And then from the third, from one part of these three, you think how much you should invest in the foreign exchange market or stock market or whatever market you want to invest in. This is the first thing you need to know. When you plan your trading, and you should plan for your trading, you don't just put a like random amount in your account and trade with it. You should plan this. And now I'm saying to you how you can plan it. So the first thing you need to know, you need to give yourself acceptable loss limit amount. You say to yourself, for example, I have saving of $30,000 in my bank account. I will only use 10,000 up to 10,000. So from this 10,000, I will think how much I want to invest in this trading account. I can like put 2,000, 5,000, but the maximum will be 10,000. For me, this is how I calculate the maximum acceptable loss limit. This is the whole money you are accepting to lose. You need to determine this amount. This is not a percentage. This is an amount. From your saving, you calculate this. This is my equation. You can even, some people have more save equation, like 10% of your saving, 5%, whatever. But my recommendation is at least, if you have like very risky attitude, you need to at least keep it less than 33% of your savings. So this is the first thing, the first number. I want you now, please don't write this in the chat. If you have a paper or on your phone, take a note of this number. Acceptable loss limit. Some amount you are okay with losing and never exceed 33% or 30% of your savings of the money, the extra money you have. If you don't have extra money, by risk management rules, you need to start working on this first before you think about investing. So the second question you need to ask yourself is, what's the maximum risk limit for a single trade? I want to ask you now, let me know. I don't want your forecast or your expectation. I want real amount, real percentage. If you are trading demo account or real account, tell me what's the real percentage of the losing trades. Someone already told me before that they lost all the account, maybe in a single trade. So for them, this is 100%. Tell me your percentage. When you are getting into a trade, how much percentage you are willing to risk in this single trade? If you are going to lose, you know you don't want to lose, but if you are going to lose, how much percentage of your account you should lose? Write this in the chat, please. Like 1%, 5%, 10%, 100%, whatever. 2 to 3% is good. Can I ask if this 2%, 3%, this is actual percent you are using in your trading account, right? Yes or no, please. Someone said 1%. Are you using this in your trading account? Say yes or no. 3. Okay, great. That's good for you. Maximum 5%. Are you using this in your account? If you are saying no, then you are like, excuse me if I say, this is like hypocrisy. You are just saying things, but you are not applying. I'm not judging you. We all, this man, we all this guy, we all this trader who says something when he is logical and calm, and then when he enter into trading and see the moves of the market, we forget about all this, right? Okay. So my recommendation, as you can already see in the slides, it's like maximum 2% per trade. Why I'm saying this? Why I determined very low. 1 to 2% is actually is very low risk. But why I'm saying this? Because I know what the first statement I told you in this lecture, in this webinar, you will never guess 100% what the market going to do. So there is always a chance, at least 50% chance. It's 50-50, right? Buy or sell, up or down. So there is 50-50 chance that you might be wrong. So I ask myself before I place this trade, if I'm wrong, and I can be wrong, because there's 50% chance I can be wrong. So if I'm wrong, how much I will lose in this single trade? My recommendation, 1 to 2% maximum. This is a single trade, a single idea. Let me also explain another thing. If you are, for example, buying dollar yen, you are seeing the trend, dollar yen is going up, so you bought, and you are risking 2%, and you see the move is going against you. So you open another trade with another 2%, and you say it's only a single trade with 2%. No, now you are putting all your account in a 4% risk. It's now not a single trade, because you are adding, actually, you are adding on your position. Is that clear? If you are opening more in the same trade, in the same direction, with a losing 2% still, you still have 2% loss expectation in the first trade, and you are adding another. So now you are making it 4%. Is that clear? Can you understand what I'm saying? So when I say in a single trade, if you are adding more trades, and the first one, the second one, you didn't close it, you are now adding to the same, so you are making huge risk, more risk in the same trade. Is that clear? Please write clear in the chat if that idea is clear. So moving on. Third principle you need to do when you apply these principles, you need to identify your exit points. So you start this trade, you, for example, expect that the euro dollar is going up, for example. So now you are buying. You need to say to yourself, when I'm going to exit, either with a profit or a loss. You need to decide these numbers before you get into the heat of the market, before you place the trade, because you are logical now. Before you place the trade, hopefully you are logical. But when you start seeing the numbers going up, making you with this blue shiny profits, or when you see it red, you will start having the fear and greed controlling you. So before you start trading, you need to identify your exit points with profit or with loss. So for example, if you decide to risk 2% of your account in a single trade, which is, for example, a euro dollar trade, and I will just put a random number, it's like $2,000 account. And you put your stop loss with 40 pips away from the market right now. So this 40 pips on the with 2% risk will be $40. So therefore, the size should be 0.1. This should be the size of your trade, what we call the mini lot. And the value of each pip will be $1. This will be the stop loss. So what about the take profit? Now we go to the fourth principle. You should not make the ratio between your expectation of losing and your expectation of winning. The ratio should be at least 1-to-1. At least. Because if your stop loss, for example, is 40 pips, your take profit should at least also be 40 pips. You shouldn't go into a trade risking 40 pips. And when you ask yourself, or I ask you, what's your expected profit? You say just 10 pips. Now you are risking a lot. You're risking 4 times more what you expect in profit. in a long trading journey, this will eventually make you lose your account. So if you are making it just one to one, you only need to win 50% of the time, which is logical. I think any of you, if you are reviewing your trading history, you will see yourself winning. I mean, the time of winning, how many trades you are winning, you will see yourself most of the time having more winning trades as a number. But the losing trade, the one losing trade, most of the time, this is what ruin your account. Please type correct in the chat if you know what I'm talking about. Most of the time, you are guessing the correct direction. Most of the time, you have winning trades, but you have more than 50% the number of winning trades. Is that correct? But some trade, just you have this idea in your mind that this trade will be the one. I will now make it. I know where the market is going. I have been trading for this time. I know that this might happen. The central bank will rise the interest rate, or this bank will do, or inflation number will come, or so and so. And now this will be the one. I will risk this amount and I'm sure I will win. And this one comes and lose your account. But if you review your history, you'll find yourself a lot of times you are guessing the correct direction. I'm keep using the word guessing because I want you to have this in your mind. Whatever you do, you have technical analysis, you have fundamental analysis, you have studied the economy, you are following the news, you are doing everything, but still you have 50% chance of losing after doing all this. So you have to keep this in mind. So when you determine your loss and profit, the ratio should be at least 1-to-1. And actually, before I was saying it should be 2-to-1, meaning the profit, the expected profit should be 2 if the loss expected is 1, meaning the profit bips should be 80 if the stop loss is 40. I stopped using this because I found it like very difficult for most traders. Most of them, they don't adhere to this. So now what I tell you is make it at least 1-to-1. And please, if you can, try to do it. Try to make it at least 1.5-to-1, 2-to-1. Try to make it 3-to-1 is great. If you are making it more than 1-to-1, then now you don't need to guess the market 50% right. You need to guess less. You need to be correct less. If you are 2 out of 3 guessing wrong, but this one trade is winning the same as the 2 losing trade, you are still in a break-even position. So at least keep it 1-to-1. Never make it 1 to like less than 1. Don't make your profit less than the expected risk. You shouldn't do this. So after this, you should go to the fifth and final step in this map. You should move with the market. I tell you, I've seen a lot of traders in my journey, and one of the biggest mistakes they make is sometimes they adhere to the rules, but they don't move with the market. You need to be flexible with the market. For example, if you are going with the 2-to-1 rule, which is I'm risking 1 and I'm willing to win, I'm expected to win 2. So my stop loss is 40 bips in the euro dollar example. 40 bips is my stop loss, 80 bips is my profit, my expected profit, my take profit. Okay. Now the market started moving in your direction. You already gaining 40 pips. You are winning, but you are 50% in the take profit. You are not 100%. You will not hit now take profit. So the market still have your money. What happens if the market reverse and goes 80% and go 40 pips? What will happen if the market go this 40 pips? You will go again to the break even. What if the market goes 40 pips more? You will lose that because you have a stop loss after 40 pips. So now you are having a losing trade. You shouldn't do this. In my opinion, if the market moves like 50% in your direction, you should move with the market. Meaning, in practical way, you should get your stop loss up to the what we call the break-even point, the starting point of your trade, the price you started your trade in. So if the market reverse goes back to your starting point, it will close the trade with 0 loss or some few pips of profit. If you do so, now you will not see this as a losing trade. It would be like as if I didn't enter this trade. Have you ever used this principle before? Say yes, please in the chat. Moving your stop loss is different than moving your take profit. I will not move my take profit. I will keep it, but I can move a little bit my stop loss with the market. I can also, if my target is big, if my target is way big, I can close some of my trade. For example, I have 0.1, which is many lot, and the trade is going in my favor. I can wait, like win or lose. Some people think like this, but me personally, I don't like this. I make myself in a safer position when at least I will have a break even if the market goes back to my starting price. And also I can close 0.05, which is 50% of my trading position in this single trade. Have you ever done this? Say yes if you've done this before, or no if you didn't. Have you ever closed gradually or started moving your stop loss with the market? Have you ever done this? Great. Yeah, I have very wise traders today. This is one of the greatest moves, I think, but it needs to be done wisely. It's not like the market moved like 5 pips or 10 pips and you are going with it. It's like percentage, like 50% for me, 50%, or even some people do it 30%, 30% move. So I'm expecting, for example, 90 bips and the market moved 30. Now I can reserve my entry. And if the market comes back, I will just have a break-even position. And for me personally, break-even position is better than a losing trade. Please type agree if you agree with me. If you want to debate or discuss this point, please also let me know. If you agree that a break-even trade is better than a losing trade, right? Great. Oh, well, thank God I don't have anyone who wants to debate. Okay, so here is I will just summarize everything I said before I take a question and go to the market with some live examples. So you need to answer 5 questions, determine 5 things. What is your maximum acceptable loss limit? And again, I repeat that this number should be from your surplus, from a money you already saved. You don't need this money. So you should divide this money into 3, and from third, only 1/3 of this amount, you think how much money I will invest in these markets. And I encourage you not to invest more than the third of your saving. If you are not having savings, maybe in the future I will speak about like how to manage your income, how to make a surplus. Maybe I will speak about this later. So the second thing you need to answer is, what's the maximum risk limit for a single trade percentage? And I repeat, a single trade doesn't mean if you open 2 trades, each one have this percentage. No, what I mean is when you have trading position, even with 2 or 3 or 5 trades, they are all in the same direction or in the same market and the same time. So now you are risking all this amount at the same time. So you need to limit this. In my opinion, it should be 2% or less. No more risk in a single trading account than 2%. In everything, if you want to buy everything, you want to buy gold, euro, dollar, yen, if you want to go all this, then you divide the risk on all these trades to become the calculation will give you 2%. Third point, you need to identify your exit points, where I will go out of this market, either with a loss or a profit. And this should be determined before you start the trade. And then you need to have a risk-reward ratio, not less than 1-to-1. If it's above 1-to-1, it will be much, much better. And the 5th point is you have to move with the market. Feel free to take a print screen of this or shoot it with your phone or write notes if you want, because this is for me like the summary of everything I said about risk management, how to practically apply it. Now I'll go to the most important thing I will say today. I always say this sentence. If you were sleeping the whole lecture, if you didn't like or hear anything I said, or if you don't want to hear anything else I will say, just keep this sentence in your mind. Don't let one trade ruin your account. Please, if you want to argue with me about anything I said, keep this sentence in mind. Don't let a single trade ruin your account. This is the most important thing I have said to you today. Because most of the time, as my experienced traders who are attending with me know that this is the most common mistake that like destroy your journey in trading, ruining the whole account in a single trade, right? Right or wrong? Please let me know, right or wrong. This is the most important mistake. If you avoid this only, if you avoid this only, you can have different trading journey, different trading account, right or wrong. It's crucial. Of course, it's crucial. So, yes, thank you so much. You are so um, active with me. So now, because of you are very great attendees, I will now let you ask me questions. If you have any question, please feel free to write it in the comments. And now I will be opening my trading account. I will be using MetaTrader 5 on my MacBook. Maybe the setup will be different, but the main idea is the same. In a moment, I will share the screen with you. And while I do so, I will take a question. Now I'm sharing my screen. Do I have any question? Can you explain the last point you mentioned? You mean the move with the market point? Is that what you mean? Please just confirm that this is your question before I answer. You said explain the last point. You mean the fifth point of the five principles, which is the move with the market, put limit for gain to avoiding rebound down. This is another question, or you are trying to explain his point? Put limit for gain to avoid rebound down. Yes, of course, putting a limit. This is what I said to you. That you need to have take profit and stop loss before you start the trade. No, do not let one trade ruin the account. Okay. So let me explain more. When I have you read with me the risk warning in the start of this webinar, of this lecture, and this is something you will find in every trading communication with any trading company. I will speak about myself. I don't start any seminar or webinar or any lecture without explaining the risk warning to everyone. I don't just put it in the screen as you see me. I read it. I was even because today also we are speaking about risk management, but even if we are speaking about something else, I will read this risk warning. I will make you engage with it. That this is a very important thing that you need to know, that you might lose everything. Why? Because you are using leverage and you are putting this money in a market that moves very fast, very strong moves. For example, just yesterday, gold moved like $200 per ounce within a day, which, by the way, is not the strongest move for gold. Gold can move even more than this. Of course, it's not normal these days for gold. For a long time, it was moving in a very slow motion. But if the market is moving this fast and you are against the market, it can wipe your account. It can make you lose everything. This is happen only if you are risking too much. By avoiding this mistake only, you can keep yourself surviving in the trading journey. You can keep your account. So how to avoid this? First of all, as I told you, starting from the amount you put in your account, in your trading account. If you take my opinion, my personal opinion, you should never lend money to trade. You should never use money from your family or your brother, like, give me this money, I know where the market is going. You never do this. If you take my advice, you never do this. You need to use the money you are willing to lose. You know that you might lose this money. So you need to have this surplus I was talking about, this extra money. If this extra money is only $1,000, this is all the extra money you have, but you can survive without this $1,000. You don't need, if you come to me and say, Islam, I can borrow $100,000 and I have $1,000 in my savings. What should I do? Should I borrow this $100,000 and trade with it, or should I go with the $1,000? You know what I will tell you? I will tell you trade with $300, which is third of your savings. See, that's what I mean by starting from the amount you put in your account. You should use the money that you are willing to lose. And then when you put this money, $300, $1,000, $100,000, whatever the amount is, you are willing to lose. You can survive if you lose this money. But then you do your best not to lose this money. So you start by using money you can afford to lose. But then when you trade with this money, trade as if this is the last money you have. 1%, 2% maximum per trade. I used to say per idea because a trade is an idea. You think gold is going up. You think dollar yen is going down. This is an idea. What if I'm wrong? I will have another idea tomorrow, or even at night, I will have another idea. So I just need to accept that I might be wrong. So how much I'm willing to lose? 1%, 2%, that's it. When you put high risk, for example, you have a $1,000 account with like 400 or 500 leverage. So you open one lot of gold. Can one, can someone answer me? One lot of gold. How many ounces worth of one lot? You know the gold price you see in the screen? It's the ounce price. So one lot, 100. Wow, very good. Impressive. Thank you so much. This is a correct answer. So when you buy, yeah, the 31.3, I think you are referring to the weight of the ounce, Andy. Thank you so much for this. Um, I think it's 31.1, but it's okay. You are now saying the weight of the ounce. I was asking about the lot size, meaning how many ounces. When you buy one lot, how many ounces actually you are buying? You are buying 100 ounces. So if the gold move $1, you are moving with it $100, win or loss. So if you have $1,000 account with 400 or 500 leverage, you can buy one lot, but you might lose all your account in $10 move, which is, as I just mentioned, gold yesterday moved $200. So this would be like a fraction of the market move. You can lose everything in this trading account in a small move. And you might be right. The direction might be correct. You, for example, you bought the gold, you clicked buy, but it made a very small correction, just $10 correction, and then it started moving. So this is my explanation about the don't ruin all your trading account in a single position. I had another question, I think. Um, no, I don't think there is. This was the question, right? So no other question. Okay, thank you. Let me go to the trading account. If someone else have a question, I encourage you to write it now. I'm just trying to not to stay silent, okay? So I'm trying to open the trading account, do something before we leave. Can we open a live trade? Oh, sure we can. Okay. Let me go to the chart. This is gold. The chart you see is the live chart. So what do you think? Gold now is at 4,266 or $65 per ounce. It's moving right now while we speak. What do you think? Let me know. Before I tell you, I will tell you my opinion. I will now open the 1 hour chart. So if you are now going to buy or sell gold, what would you do? Buy or sell? Buy 272. Oh, you're a scalper. You just want to take few dollars, huh? Sell. What would be your stop loss and take profit for the sell? And when you mentioned the buy, you mentioned the target, but you didn't mention the stop loss. Sell 4,239. Guys, where is the risk management? Where is the stop loss and take profit? You are just saying buy or sell. Give me a complete idea. You need to buy or sell. You need to give me stop loss and take profit. What would you do? I will tell you, I will make my own trade, but first I want to give you the opportunity to tell me your ideas. I will do the trade before I leave. And I'm about to leave because I took a lot of your time. Maybe 1 hour or 53 minutes ago. Sell 2 to 1. Oh, you're just saying that. Give me numbers. Stop loss 4,273. This is it's a scalping trade, right? You want to scalp. See, for buy will be, stop loss for buy will be 4,260. Okay. Okay. Since we are having so little time, let's make it a scalping trade, like very, very fast. Okay. What do you say we go to the 1 minute chart? Would you like that? See, yes, please. Wow. The market addict. Okay. Sell when down maximum 2% for 202. Okay, great. You are all giving great ideas. Just to let you know what I'm doing right now, it's not a recommendation to sell or buy. We are just giving examples on the market. Of course, you know that. So whatever I'm doing right now is not an invitation to buy or sell. I'm just sharing with you some ideas. And actually, what I'm using right now is just a demo account. So to clarify this, it's in 70 now. I was right. Okay, great. Let's buy. I'll take this buy. Okay. Now I took this buy just because I think the market is going up. So I bought gold. So right now I made a very, very huge mistake. Can you tell me what mistake I did? Now sell boss. If you are asking me to sell or to buy, it's your call, man. Opened buy from a top. No stop loss. I want answers, please. Give me answers. In the middle of a trade, you should not buy when the sell will drop down. Hmm. What is the mistake I made? There is a huge mistake. What was that? Is the mistake that I clicked buy in a very high price? Is the mistake that I bought gold without reviewing the Federal Reserve last economic indicators? You buy at a higher selling price. Buy when the sell. Come on, give me answers. No, no more answers. The mistake, my friends, is what we were speaking about the whole time. I started a trade to buy or to sell, whatever I did, without exit points. There was no stop loss, no take profit. You can see my screen, right? No stop loss, no take profit, no risk to reward ratio. Please type yes if you did this before. If you open the trade just as I did it, buy or sell, just from this quick open button. Say yes if you did this before. The mistake wasn't I expected the direction right or wrong. The mistake is I did it without any risk management. Type yes if you did this before. This is, my friend, is a huge mistake. Even if you win this trade, you are cheating. Always. What I did in front of you right now is forbidden, guys. You should not, you should say always. My friend, never do this. Before you start a trade, remind yourself when and where I will exit from this trade. What is the percentage of risk? What is the percentage of profit? If you have no answers for these questions, never open a trade. You asking me right now to open the trade, and I had this in my mind. I said I will do it without any stop loss or any take profit, so I will see their feedback. Maybe one of you noticed, but most of you, this is for you is the normal, right? Like, what's wrong? The guy just bought. What happened? Man, my brother, you should open the trade with a stop loss, with a take profit, with a risk to reward ratio. The idea of buy or sell is not complete until you back it up with stop loss and take profit. This is the whole subject of today. Let me rephrase this. There is less importance of your prediction going up or down than the importance of risk management. The risk management is more important than your prediction. This is not a game of guessing up or down. This is if this is a game, it would be a risk management game. Type agree or no. If you agree with me, say agree. If you don't agree, say no. This is a risk management game, guys. My friends, this is a risk management game. It's not a guessing the right direction game. You can guess the right direction. You can sometimes mess the right direction. But you have to get yourself in a risk management, a proper risk management position the whole time. So that's the most important thing. You never think about like I win, I lose in a sense of guessing the market. you should always have your risk management plan before you start predicting the market. So let me know if I have any more questions. I will speak briefly about why I opened this trade. Of course, as I told you, this is not to encourage you to buy or sell gold. I'm just giving you this as an example. For me, if you force me to open a trade just like this one, I would say I would buy, but I would put my stop loss 4,200. This would be my stop loss. Okay. And my target would be something around the 5,400. This would be a long term trade. I would keep this for the whole year. If I'm just in the middle of the day and you want me to scalp, for me, this would, I actually, if you ask me, I would say no trade. I will never take a trade in this place. This is my personal opinion. Why? Because we are having tomorrow NFP. Say yes if you know what I'm talking about. Tomorrow we have NFP. So this is the NFP night. NFP is very important news. Market, I think, will be crazy from now until we get the NFP. I'm from the second NFP will come, market will be more crazy. For those who don't know what is NFP, we will have the employment data from the US. This will be the average hourly earning in the US and the unemployment rate in the US and what we call the NFP or the non-farm payroll. How many added jobs other than the farm payroll jobs? So in this time for me, and this is like a hint, a bonus hint for you, those who stayed with me till the end. Timing of trade is very important. Maybe also I'll speak about this in another webinar. We will also have webinar coming Thursday, hopefully inshallah at the same time. So please communicate with your person of contact. If you didn't open an account with GODO until now, I encourage you to open a demo account if you have no experience. A real account with the risk management rules we just explained would be good also. And every Thursday, we will be a different subject, speaking like what we spoke today about how to make your trading better. So if I have any more question, I don't want to take more of your time today. I think 1 hour is more than enough because now you would be like losing interest, maybe sleeping while I speak. So if you have any more question, please feel free to write it before I wrap everything up and leave. I was very happy today. You are great attendees, great audience. Your interaction was very great, very smart. I envy myself to have you today. You are one of the most like active attendees I have. Thank you so much. If you have also any feedback about me, let me know now. Tell me if that was great for you, if that was the best webinar. I'm just joking. Just give me your feedback. I accept and appreciate any feedback. And always get in touch with you. Yes, sure. As I told you, communicate with your personal contact. You can also ask if you want to speak to me. So it's amazing, informative. Thank you so much. You'll always give the best. Thank you so much. Where are your office located? I'm a fresher. I want a private mentorship. I'm in Dubai. Please communicate with your person of contact. Today, you was invited. You were invited by someone, right? Speak with this person, and they will help you, inshallah. Very useful. Thank you. 10 by 10, very informative. Thank you so much. It was a great session. Thank you so much. I will say the same about you. You were very great attendees. I enjoyed my time with you. Please, if you have any more question or if you want to communicate with me or if you want help with your trading account, communicate with your person of contact, your trading account manager or whoever invited you to this session. Thank you so much. Inshallah, coming Thursday at the same time, 6 p.m. Dubai time, I will be having a new webinar. So please join me in this coming week. Thank you so much. If I have no more question, I will leave you now in peace. Thank you so much.